Hello, everyone. Thanks for joining us today. We have a stellar lineup for you as usual. If you have any questions for our panelists during the presentation, you may enter them into the chat or the Q&A, and we'll read those out for you. And I will also be putting all the contact information for each one of our speakers today in the chat, so you can follow up with them in case you have any questions you'd like to come through with afterwards. But without further ado, I'm going to turn it over to our MC, Mr. Tom Berkler.
Thank you, Lisa. Not to brag here. I'm not known to do that very often.
No, you're not. Very humble.
Yeah. Lisa says we have a stellar lineup as usual. We have a stellar lineup unavoidably. There's no way that I can't dip into our cast of employees, associates here at CPS, and come up with anything less than that. And today's no exception. No, gentlemen, thank you. We're almost exhausted the month of November here, and I guess the football season really begins this weekend in college football as we look at all that goes on. And I know you're all avid fans, but we won't get into that today because we got a lot of important information. A little bit out of the lineup today, Matt Anderson. Matt usually kind of hangs back to see how things are going. But Matt, you have to leave. You may have to leave early. You're going to donate blood. Is that what you said? There's
Yes, it's desperate need of my rare blood type. So
yeah. O negative. Okay.
Correct.
Matt, that is the only thing about you that is negative. Okay. So Matt, it seems maybe we're beating this drum too often, but everybody's got their eyes on what the states are doing with regard to mandatory LTC plans. And you and I have kicked this around a lot to keep the whole thing in perspective. And we think it's good that attention is being drawn, but there's a tendency people may be overreacting to it in the wrong way. And you're going to kick that around some more with us today. So what do you got to tell us before you go out and serve humanity in the local blood drive?
Well, before we get started, I was thinking around Thanksgiving time, it's always a good time to be thankful. So I wanted to take some time just to thank our producers, our advisors that are submitting business. We appreciate you, and we appreciate the business that you submit. Tom, like you mentioned, I think probably the hottest thing in the LTC world right now is these state mandated LTC plans. Just a quick background on what we're seeing. Washington was the first state to launch their plan. We're seeing several other states getting ready to try to come up with some legislation to launch their own plan to help fund these LTC needs down the road. When you get to the bottom of it, it's really kind of a money grab, I think, right? They're looking to raise some money to help pay for the care that they're having to pay for those clients that don't have assets, don't have a plan, and don't have income. What we're seeing some success with is actually people that are interested in putting together a plan, a true plan. Specifically business owners. So as an example, if you have a 61-year-old business owner, it's really a two-part swing. If a 61-year-old is buying LTC coverage, let's say he makes $250,000 a year, he'd be able to deduct $4,700 per year of LTC premium from his taxes. On top of that, at least with California, if we assume that they pass this new state mandated LTC plan, he would be able, and the tax is maybe 1.3%, which isn't too out of line. He would be avoiding an extra $3,200 in taxes paid for that new tax. So we're seeing a lot of success with business owners trying to purchase a plan that are interested in buying a plan, protecting themselves, their assets, and their family. And maybe the upside is they're also going to be avoiding a potential new state tax for long-term care.
Matt, you and I, again, we've talked about this a lot. You were kind of conciliatory with regard to the prospect that California may only assess 1.3. In fact, that's considerably higher than what Washington has.
The range is kind of 0.6 to 2.3 is what they're looking at with the 5 different plans. Ultimately, we don't know what it's going to be, but certainly for high income earners, there may be a good opportunity to put in a strong plan and potentially avoid some of that new tax.
Well, and again, we know it's not going to stay there. It's like the sales tax in states that have them. They started at 2% or something. I know that in the Athens, Georgia area, it's 7%, and we've gotten used to it. If you were to come into anybody and say, we're going to raise your income tax bracket 7 points, they'd go through the roof. But now it's all hidden.
Correct.
One of the things, Matt, that you've been careful to do too, is everybody, because of the Washington experience, has said, well, I'm going to go ahead and get some private care, so I'll get a waiver. And you mentioned what you might be able to save. But when I hear you talk, you're cautionary. We don't know that that's going to be a guarantee, specifically in the California plan and maybe in all the others.
Yeah, I mean, at the end of the day, the bill is not fully written yet. What we suspect is that once the bill is written, there will be a 12-month backdating. But again, we don't know what it's going to look like. I was talking with some clients yesterday, and they were very interested in avoiding the tax. I can't 100% advise them how to avoid the tax, right? Because we don't know what the bill is going to look like. The only thing we can do is put in place a very strong plan and put them in a position to hopefully avoid a tax. But at the end of the day, we don't know.
Yeah, yeah. What's interesting, we'll keep track. And of course, the important thing is it's just giving attention to, you can argue among yourselves who's going to need their coverage the most. Steve Jones would argue with you whether there's a greatly likelihood of a disability or a long-term care event. All Rob can argue is that we all know we're going to die, but that could be 50 years down the road. But I think if people, and Steve, this speaks to you too, we're more aware of the likelihood that they would use this coverage, more people would give attention to it other than trying to avoid a state mandated plan. So
Absolutely.
Thank you. Matt, feel free to leave. There's somebody out there that's as negative as you that needs your help. So, so feel free to break away. I just hope our viewership doesn't take a dip once you leave the screen. Thank you for joining us. Steve Jones, end of the year, we probably will have another CPS or so, but we've got another month, maybe production time here. You asked for a few minutes just to maybe give an overview of some of the overlooked things in the array of disability products that are out there. What do you have to say to us?
Exactly. And as Matt mentioned, a big thank you to all of you. We really appreciate your business and enjoy working with you. Very thankful to have you as brokers. As we're getting close to the end of a very successful 2023, I just wanted to take a few minutes to kind of review with you the different products and services that we offer here in the Disability Income Department. First and foremost is individual disability insurance, or as we prefer to call it, income protection. Now, these plans are designed to pay benefit to the policyholder in the event of a total or a partial disability. We also write, I would think, secondly, probably business overhead expense coverage. Now, these plans are designed to reimburse a business owner for business expenses that are incurred during the course of a disability. And I find that business owners, especially that small business owner, their business is their baby. If something were to happen to them, we want to make sure that they can continue the business in the event of a disability, or unfortunately, if they're not coming back to work, they're able to sell their business for what it's worth. We also write disability buyout. Now, these plans are designed to provide funding under a buy-sell agreement. Usually when you think of buy-sell, you immediately think of life insurance, but I see more and more buy-sell agreements that do include the need for disability insurance coverage. So we're writing our fair share of that. Also, business loan protection. A business owner takes out a loan, the bank says, okay, we're going to need some type of collateral in case something were to happen to you. It could be life insurance. I'm finding more and more banks are like, if you're out disabled, we're going to want to make sure that there's benefits coming into us. And that's where the business loan protection comes into play. These plans are designed to kind of match the terms of the loan and the monthly obligation. Also, key person coverage. You have a business, they have a very important person to the business, drives a lot of revenue to the business. They're out disabled, it's going to have a negative effect on the business. Key person is designed to provide a benefit to the business owners to kind of fill in the gap during the loss of that key person. They can use those benefits as they best see fit. We also write our fair share of critical illness insurance. These plans provide protection and pay a tax-free lump sum benefit if there's a diagnosis of a covered illness. including heart attack, cancer, and stroke, and also group insurance. We can write group benefits, non-medical, the more the ancillary benefits, down to only 2 employees. And this can be a husband and a wife. And those benefits include group life, short-term disability, long-term disability, dental, and vision on both an employer paid and a voluntary basis. So those are kind of the products. I know, a lot of times that we don't talk about these as much as we should, but I just want to kind of bring those to the fore. Again, we do work with 13 of the leading disability insurance companies. So we're able to help you put your clients in the best position possible based on their occupation, income, and health status. Tom and I are always here to provide service for you. Think of us as your back office when those opportunities do arise, with your clients and prospects. And then last but not least, if you don't feel comfortable talking about disability insurance to your clients, or maybe you just don't have the time, bring us in, make the introduction to Tom and I, and we'll provide the proposals, we'll present to your client, we'll take the application, everything all the way through policy issue, and you would still receive commission on the case. So just kind of recapping, all the different products and services. Once again, we're very thankful for you guys for what you've done for us so far this year, and hopefully moving forward in the years to come.
Steve, something you mentioned, Rob and I talk all the time to agents and clients about the need for life insurance in 2 situations. One in buy-sell agreements where you need the money to buy out a partner, and the other one is key person coverage, where, hey, if one of the key owners dies, they aren't there to service the company either. And you and I have talked more about the fact that there's really a double need there. What happens if you need to buy somebody out in the event that they become disabled? So it isn't just a life question, it's a disability question. And then you said, same thing. If a key person becomes disabled, not only is he or she without income, but the company has lost revenue. So that key person element is there, and you toggled on both of them there, and I appreciate that.
Yeah, thank you. Thanks for your time.
The feature, maybe you didn't mention, maybe I missed it, but in your product thing, I'm intrigued by, I think, something that Tom Nichols talked about last time, and that are disability policies, where's the ability to get your premium back if you don't use them.
Yep. We do have a few carriers that include a return of premium rider at certain intervals. A certain portion of your premium is returned to you. We found a lot of success with this product with investment advisors, because they do provide attractive returns for that. So definitely keep that in mind too.
Yeah, and that does much to eliminate the use it or lose it reputation that disability insurance has. So, all right, well, thank you, Steve.
Thank you.
Now, we took a vote before we came on the air as to who was the coolest person in the panel. And Lisa, you came in first. I think it was you got all the first place votes.
I mean, obviously.
Yeah, I expected that, but I was very discouraged that who didn't come in second. In fact, it was Rob Reedy, and there were comparisons to the Fonz, if you remember that show. Rob, we'll judge how cool you are based on the next couple minutes here. What do you got to tell us about life insurance?
Thanks, Tom. So I just wanted to share a couple areas where we're seeing a lot of success in 2023. And the first of which is life insurance planning that incorporates long-term care protection. It's something that we are talking about literally every single day. It's something that I own personally. And we've got some really unique and cool solutions. One of those, many have heard me talk about John Hancock's Universal Life with a long-term care rider. Typically that rider costs about 10% to add that protection to the policy, but you can pay for it with Vitality. So literally there's no additional cost to add long-term care protection to your overall portfolio if you use John Hancock and the Vitality rider. The other one is really unique too. Unfortunately, it's not available in California yet, but we do have a carrier where you can purchase a term policy and convert that term policy within the conversion window and add long-term care with no underwriting for the rider. So literally, if you think about it, you've got a client that's got inexpensive term insurance, they become uninsurable, they can convert it to permanent, add long-term care with no underwriting, and go on claim right away. So very unique solution out there in the market. And then the second area is where we're seeing a lot of success is estate planning ahead of the tax changes coming in 2026. We're already starting to see.
Rob, can I ask a question
yeah,
before
go
you get
ahead.
into the second area there?
Yeah.
I always think it's surprising if you have a new life policy. I would think, well, it isn't too unusual. You could get the long-term care rider without the underwriting because they know about you from the underwriting. But it seems they couldn't dodge a bullet if there were cognitive issues. You help me because you know more about it. Does cognitive come into play for the life underwriting that would alert them to the fact whether or not maybe there ought to be in other words, it would lessen the chance they could get the life insurance that they would be exposed on a long-term care rider.
So if they're going through underwriting for a new life and they want to add the long-term care rider at the same time, the underwriting is, primarily mortality based for the life insurance, but they do underwrite for the long-term care rider at the same time. So there's a chance if they've got cognitive issues, that's going to come up during underwriting. But with that term solution, if they develop a cognitive issue down the road, they got a guaranteed conversion and a guaranteed long-term care rider, literally when they're about to go on claim for long-term care. So very unique.
I misunderstood. That's just remarkable to me. Okay, I cut you off on your next point there, Rob.
No, it's quite all right. So Tom, it's something you and I are talking about more and more as we near that tax law change coming January 1, 2026. We've already got clients working with their attorneys to plan for the reduction in the exemptions. I think it's going to be somewhere around 7 million per person as opposed to approximately 13 now. So clients are talking about it. We're having success. We're placing large policies inside of trust to provide the liquidity that these clients will need to pay the taxes. In fact, I was working with an attorney just a few weeks ago, and I said, we got a lot of clients that are looking for attorneys to help them draft trusts. And he said, sorry, I can't take any referrals right now. I'm too busy. I'm working with too many clients because this tax law change is coming. So it's something to think about as we near that change in 2026.
The one of the things we were kicking around is emailing among ourselves, the salespeople this morning, as far as a starting point. If you have a prospect, and you pointed out, Rob, it's easy to identify the prospects, whether they've done any planning or not. Single people worth 7 million or more, in that range, a married couple worth 14 or more. And we have a very easy solution to get people started, and that's a simple estate tax calculation. Because some people don't know how bad it is once you get over those 2 marks. And we've got the old joke, the farmer used to say that before you started using a mule, you had to hit him in the hindquarter with a 2x4. And they said, why? He says, because before you can get the mule to do anything, you got to get their attention. And I think that's true with high net worth clients. They're high net worth because they're busy doing other things. And this calculation, this flyover estate tax is an estimated estate tax liability, gets their attention, and we need very little information. If you give us whether they're married, the state they're in, and their approximate net worth, we can come up with some figures. So that's always available. And that's available on a 24-hour turnaround if we like you. If we don't, it may take 36 hours. So we know that not everybody out there requesting these is as cool as those who were voted that in our pre-show election here. Steve, Rob, anything to close with here? Or Lisa, have you got the coolest person? Lisa, do you have anything to say?
Well, we do have a question in the chat for Mr. Poole, Mr. Fonz. Rob, which carrier was the one with the term conversion option with LTC?
That is Securian. Again, not available in California yet, but a very unique offering.
The other thing not available in California is apparently O negative blood. That's why we lost Matt earlier. So,
and Tom, one thing I would add to the estate tax planning conversation is that just because your agents are working with high net worth individuals, they should never assume that they've already done the planning. We've all heard many stories, a lot of celebrities where it's tens of millions of dollars, sometimes 100 million, and they haven't done the planning. So it's always best to talk to them, bring it up, have a conversation, and then pull us in as needed if
Yeah,
you need more
yeah.
help talking with their
No,
advisor.
that's a good point. You've alerted to two concerns. One is the fact attorneys aren't going to be available 2 days before 1/1/26.
Mhm.
But the second thing is the assumption that people have planned. Rob, bear me out. A lot of the cases where we run these estate tax calculations, they haven't done any planning.
Right. Yeah.
And they may have some trust planning, but we review the trusts as well. We can't give our legal opinion, but we review the trusts. And a lot of times the trusts aren't doing what they wanted them to do originally. So,
Absolutely.
and if they have coverage in force, Rob, I think you kick around a lot of times we review coverage, and at least 50% of the time we can offer a better alternative. Is that a good estimate?
Yeah.
Yeah,
The
so
older coverage doesn't have the same benefits many times. So
yeah.
that's a good estimate, 50% of the time.
So we're here to serve. All this talk about thankfulness. I'm thankful for you all, and I'm especially thankful you showed up today. Lisa, if there's no more questions, Lisa, take us out of here.
All right. Thanks for joining us today, folks. Look out for our next invitation, which will probably be in another few weeks.
All right.
Take
Have
care.
a good day.
Thanks, guys.
Thanks.